Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There is no second best crypto asset.
Hello, friends, and welcome to the Why Bitcoin Show. I'm your host, Dale Warburton. It's a weekly podcast on why Bitcoin matters and what makes it completely different to all other cryptocurrencies. If you're interested in Bitcoin and you'd like to distill crypto fact from fiction, you've come to the right place. All right. So today I have got Andy Pattinson from the Bitcoin Advisor. Welcome to the show, Andy.
Thanks, Dale. Thanks for having me. Really excited to have a chat with you today.
Yeah, me too. And I sometimes like to start by sharing a little story about how I first remember you and my first engagement with you. It was at Murrah. Listened to your impassioned presentation on self-managed supers and thought to myself, geez, man, I've got to do something about this. So yeah, we'll get into that. And then afterwards, we were out in that sort of beer garden area. And, you know, because I'm a South African, I was like spotting all the different tables in a way. I was kind of like, oh, there's the Brisbane crowd and there's the Sydney crowd. And I was kind of like a butterfly walking from table to table, loving it. And eventually I found myself in the Sydney table and I was chatting along there. And I just heard you having a really intense discussion around the challenges of parenthood. And I just like, I love how Bitcoiners like go straight to the core. They have real conversations. And I was like, yeah, this guy's like, he was outlining some of your challenges and things like that, and being a parent. And, you know, I'm not a parent. I thought, you know, that's one of the stories that I used in a later article. And I didn't name you, obviously, but yeah. So anyway, that was my first sort of touch point with you, but stoked to chat today. Just from a background perspective, I always like to give the listeners a little bit of an overview of sort of who's on the other end of the mic. So if you could just give us a high-level overview of kind of who you are and your professional background, or give us as little or as much information as you're comfortable with.
Sure, no worries. So I'm a POM originally from Nottingham in the UK, spent about 10 years in London, a few years in Melbourne, went back to London for a little bit, and then I've been in Australia for about 15 years now. So I tend to professionally kind of think of my career in a number of different epochs, and the first 15 years was IT roles, doing, you know, project management, program management, head of IT style roles. I worked for some really amazing companies during that time. I was kind of lucky. I did computing at university, and out the back of that, joined some really great organizations. I worked for Buy.com in the US and then JohnLewis.com in the UK. And I was head of IT at ASOS.com and worked at Avis and a bunch of others. So I had quite a varied kind of IT career in the UK, and then came over to Australia for a couple of years on a year off, and then went back and did a few more years. And then really the last 15 years, I've been doing IT sales. So I kind of flipped from being the customer to selling to the customer. And it's not generally a kind of common path to go from head of IT to a sales director. It's a bit unusual, but I actually found in myself that I'd been selling to, you know, the C-suite for years as the head of IT, trying to pitch different projects and things that we needed to do. So I got very kind of familiar to pitching to the CEO and the CMO and so on. So actually, I found it quite a natural progression to then go into IT sales. So I spent the last 15 years selling Salesforce implementation services for all sorts of different organizations. And really, for me, that's quite a consultative sell. So you're going into all these big companies and financial services institutions and banks and, you know, insurance companies and you name it. And you have to go in and learn how they operate and work out where you can add value and where your products can add value and how you help them get better at what they do. And there's a lot of commonality between businesses, but working across, you know, a huge number of different verticals, it's always fascinating to see how different organizations operate and what they have in common and how they're different and what, you know, systems and processes are regular and which ones are irregular, and how you can help them as a consultant, you know, improve their organization and deliver better outcomes across the board. So it's been a fascinating time doing that. And then obviously fell down the Bitcoin rabbit hole in about 2020, and now feel like I'm kind of entering the third epoch of my career and getting into Bitcoin. And that started, as you mentioned, talking about self-managed super and how to get how to get your superannuation funds into a self-managed super and Bitcoin. A bit of a story around that, and that's how I met Peter Dunworth. And from there, we've gone on to create the Bitcoin Advisor, and for the last few months, that's been accelerating and has been, a wild amount of fun. So I still have my fiat job and still love doing that. But at the same time, I've now kind of transitioned into a day a week doing the Bitcoin Advisor and spend my days talking to Bitcoiners, which is fabulous.
You said it, hey? It's absolutely fabulous. No, I love it. I said fabulous because it's a joke. It's an inside joke between my wife and I. Anyway, yes, I think there's nothing better than talking with Bitcoiners, and it must be incredibly fulfilling. And I found what you said there about the consultative nature of selling software like Salesforce, because it's a huge part of an organization in the sense that they're not going to make these switches very lightly. And so you've got to kind of go in, dig a little, understand their needs, and perhaps you're going to apply a lot of these skills now that you've learned over the last 15 or however many years in the Bitcoin Advisor context, which we can dig into a little bit deeper. So much like you, I'm also a class of 20. So what was it about 2020 that sort of helped you kind of understand Bitcoin? Like, what's the orange pill story?
Sure. I guess COVID related, in terms of all of a sudden you're not in the office anymore. Nobody, particularly in the line of business we were in, selling consulting services to large organizations. When the lockdown started happening, we were all like, oh my God, how are we going to sell this stuff to customers remotely? Like, I was constantly on planes, flying up and down to Melbourne, flying, all over the world, doing, all over the region, doing sales. You wouldn't be a week go by where I wouldn't be on a plane going somewhere and flying back and, juggling life and doing all of that. And then all of a sudden you're in lockdown and you've got time on your hands where you're not traveling. And I started, wanting to understand more about money and investing, and started getting, worried about my future and everything else and my kids' future. So fell down the rabbit hole. Rather interestingly, Raoul Pal was doing reasonably well back then, and before he started shitcoining and doing all of that stuff. But back then he had a very compelling set of arguments at a macro level about what was happening. They just started the Real Vision daily updates, which were really fascinating to me at the time, because I, in reflection, didn't really understand money, didn't really understand hard assets, didn't understand anything really. So really fell down that rabbit hole very quickly. So I'll credit Raoul with orange pilling me, even though, everything's gone very sideways for him over the last year or two. So that's kind of where it came from. But I spent a lot of time just getting very interested in Bitcoin and understanding it, and just started buying a little bit and then buying a little bit more, and then selling everything else I had and buying more, and then ended up looking at this pot of money in my superannuation, and I'm going, well, I want more Bitcoin. So how do I get it from here to there? So I contacted my superannuation fund at the time, Australian Super, and said to them, look, I'd really love to get exposure to this asset. How can I do that? And I was hit with a wall of FUD of all the usual nonsense that uneducated normies, kind of throw at you, or the traditional finance system throws at you. So, terrorism and Ponzi and, risky and volatile and, blah, blah, blah. We're never doing it. So within 24 hours, I'd worked out how to do it and kicked off the process of setting up a self-managed super fund. And it took a couple of months to get kind of through that process. And eventually the funds were in my self-managed super bank account, and very quickly turned into self-custody Bitcoin. And that was, kind of a really interesting process for me. So kind of how I ended up meeting Pete, it was not long before Murrurundi, and I'd agreed to speak at the Bush Bash and tell that story of what I'd gone through. And I thought in addition to that, I wanted a resource available that people could, call on. I'm not giving anyone financial advice or telling them what to do. I'm just telling them my story of what I did and how I did it. So I put bitcoinsuper.io together and kind of share that with the world. And that got Pete and I talking, and kind of the Bitcoin Advisor is the next step on from that.
Brilliant. This Raoul Pal fella, he's popped up in a few. I mean, I've had maybe, I'm not sure what number interview this is there, Andy, but I think he's been at least mentioned 3 times. And I also credit him. I found him to be highly credible. And at the time, obviously things have changed. But it's quite incredible. And it does make you think that, I wonder who the actors of today that we sort of would look at and say, oh, this person's a bit of a grift or whatnot. Are they perhaps bringing in new Bitcoiners? Like, they might not meet our standards in terms of what we think a true blue Bitcoiner should be. But, people might have said the same thing about Raoul, but like, he I mean, I know at least like 5 people then that, bought Bitcoin because of him.
I think it's true. I mean, the beauty of the Bitcoin Advisor, I get to talk to Bitcoiners every day, and they all have their own origin story, and they all have their own description of how they found Bitcoin and who's influenced them, and so on. I think one person mentioned Crypto Casey was really good for them, and she'd made like loads of noise. I haven't heard of her. I haven't looked into her, but I guess by the title, she probably does more than just Bitcoin. And we focus very closely and heavily on Bitcoin only, and convince everyone else why anything else is a bad idea, or at least a gamble. And if you want to gamble, go gamble. But if you want to invest or save for the long term, then Bitcoin's the right vehicle for that. So everyone has different people that influence them and bring them in from the people that I talk to. And there are others as well. But I guess it's changing, right? It's very different now from how it was in 2020. And I'm sure very different from 2017 and 2013 and so on. Each cycle has its own kind of actors and its own, people that, famous people or famous Bitcoiners and so on. I reckon this cycle's different because of a lot of the washout of FTX and Duquan and, all the troubles Binance are having, and now BlackRock coming into the scene as well. Like it's quite a different narrative. And of course, post-COVID, I think everyone's probably a little bit more skeptical of institutions like central banks and everything else because of such a mess they've made of everything. It feels like there's a broader skepticism, in the broader audience. So, perhaps I'm talking to more people about it, but that's definitely the feeling that I get. And therefore, this cycle, who do you listen to? I mean, Preston Pysh is always a go-to. Jeff Booth is always a go-to. It's great, like, relatively new faces like Larry Lepard are fabulous. He's clearly a big gold bug advocate, but he's also a massive Bitcoiner and, really understands the difference between the two and the place that both have, and is vehemently and adamantly a Bitcoin only person from, a crypto perspective. And hopefully all of that kind of adds up that maybe there'll be less shitcoining in this cycle because everyone's seen what a mess it's been previously.
That is my sincere hope. And although I have this feeling that human nature being what it is, I suspect there's kind of 2 things that could happen. The one in my mind is that we will never see another so-called crypto bull run. And I'm talking about everything other than Bitcoin because for all the reasons that you've highlighted. I mean, just all the liquidations, all the Ponzi's, all the fraud, all the silliness and the rug pulls and the just pure stupidity, I describe it as. However, there will always be grifters, and they're going to be grifters on the fringe who use Bitcoin during the bear to sort of elevate their brand. I'm happy to kind of name, like, the one person I look at and I'm like, God, what a grifter, but very good, is Layla Hepburn. And, she's now got a reality show where it's like some sort of crypto reality show where you can go and pitch your TV show to her and a bunch of other VCs. And you're thinking to yourself, like, and she's also like, she bangs on about all the right things in terms of what we think is good in terms of from Bitcoin's perspective, freedom and, anti-central banks and blah, blah, blah. But then has got to show. So
affinity scamming.
Yeah. And so it's like, so I think there's going to be more. And so like, there's people like her. And I think there'll be more grifters on the fringe, but I do hope that a lot of the wind has been sucked out of it. But I certainly don't hold my breath because I think
maybe the other really fascinating dimension, which has become apparent. I mean, I'm a big fan of Rational Root and the work that he does and puts out, and love the kind of spiral charts, my favorite chart in Bitcoin. But there's the other one that he put out recently was declining balance of Bitcoin or available Bitcoin. So up until the last epoch, the balance of available Bitcoin was increasing. And since the last epoch, it's been declining. And that's clearly compressing available Bitcoin, and therefore it should have an expansive impact on the upside volatility of price. And so I look at that and I think that in conjunction with Michael Saylor and the correct accounting method for Bitcoin, which is coming close to passing legislation or at least being the recommended method for accounting for Bitcoin, fair value Bitcoin, that could potentially open the floodgates to a lot more institutions buying into Bitcoin. So the combination of that declining available supply and the floodgates opening for corporates buying Bitcoin could well override any of the noise around altcoins and potential upside there, because Bitcoin could well have a much more explosive blow off top than its perhaps muted blow off top from the last cycle, where all of the paper Bitcoin and FTX and everything else, I think, caused quite a suppression in price. And then I think, just the sheer human nature of all of that could well suppress the altcoin side of things, because Bitcoin has the potential to be so explosive in that scenario, I think.
Yeah, I think that's a pretty good thesis. And then you layer in also the ETFs, which are on the horizon. And it might take a little bit of time to get proved and that sort of thing. But if you imagine, declining sort of available supply and increased, let's call it, clarity around the accounting. And for those listeners who aren't necessarily familiar with it, as I understood it, effectively, you had to write down your Bitcoin every quarter if you're a public company, and you couldn't actually record the gains, but you had to record it as some sort of impairment. And so Saylor was down.
It was a ratchet loss, right? It's crazy. Like, it becomes worth less and less over time, rather than you being able to state the value of it at any particular quarter.
Yes, exactly. Which it feels kind of irrational. So it's good news that is potentially changing. I think, just to sort of finally put a sort of nail on the crypto side of things, given this is the Why Bitcoin show, and part of my ambition is to help distill the fact from fiction. I like to get everyone's take on what really the distinction is between crypto and Bitcoin in their eyes, and perhaps why you are focusing so heavily on Bitcoin and nothing else.
Look, I really consider Bitcoin as my savings account. I've worked hard across my career. I've saved money as best I can, perhaps more effectively since I discovered Bitcoin than ever previously. I was certainly a lot more frivolous prior to Bitcoin with any money that I had. And so I consider Bitcoin my savings account. I've worked hard for that. I'm saving my time and energy in Bitcoin. I'm DCAing every week and putting money away for my future. Obviously moved all of my superannuation into Bitcoin 100%, and every compulsory contribution that I get from my employers goes straight into Bitcoin. So I'm using it as a long-term savings account. And I think, being good friends with Peter and working with Peter, he has some fabulous price predictions and other things that make you think that it's certainly a very viable method for saving value. I look at the alternatives and alternative coins and the speculative nature, and they all have a very similar chart profile, which is shoot to the moon and then drop to the floor. And it's a classic pump and dump in the vast majority of scenarios. I see it as gambling. If you can get in early and sell at the top, then, bully for you. You might as well do that if you want to gamble, or you can pop down to the casino and drop some money on the roulette table and hope for the best. But neither of those methods are risk managed methods for saving money. They're methods for gambling, and you can get lucky and win, or you can get unlucky and lose. And it's likely that the latter is more common. So for me, people are into altcoins and gambling, then go crazy. But for me, I'm in this for the long-term savings and generational wealth and the ability to look after my kids and retire early. I think one of the things I often talk about with the self-managed super and Bitcoin, it could well be the difference between a retirement and not.
Yes. Just sort of to zoom in a bit on that. So you're saying, like, you look at it as gambling, and frankly, I do too. I've got my own personal reasons, but could you maybe just expand that a little bit for people who might say, look, that's exactly what a Bitcoiner would say. And, let's unpack that. In what sense is crypto gambling in your mind?
Well, I mean, it's all about counterparty for me. With Bitcoin, there's no counterparty. You save your money in Bitcoin, you self-custody the Bitcoin. In that self-custody scenario, there is no counterparty risk. All the risk is on me. I've invested my money in Bitcoin. I am looking after that Bitcoin. It's mine. If I invest into a crypto, there are counterparties at play. There are people that run those coins. There are people who decide on the issuance of those coins. There are market manipulations that we can't possibly understand that are going on all over the place. There's paper values of it. There are pre-mines of it. You look at Ethereum and how much they pre-mined of that. They've moved from proof of work to proof of stake. The Ethereum Foundation dumps coins whenever it needs to refund itself. It's a completely manipulated market. So you're gambling because you're taking a risk that the time that you get in, And whatever manipulation they perform during that time and the time that you get out, somewhere in the middle, you hopefully make money and don't lose money. That to me is very simple gambling. I much prefer the lack of counterparty risk and knowing that I self-custody my own money and nobody can do anything about that. It's under my control.
Amen. Yes, exactly. It's like the rules are clear. Everyone knows the rules of the road with Bitcoin, and with all these other projects, you're dealing with rules made by humans that are constantly changing based on a set of criteria that you don't have any insight into. And to me, they're not inherently fair. The other thing that I've actually started digging into, and I'm surprised I didn't actually go down this path before, is all of the CBDCs that are inevitably going to happen are being built on Ethereum too. So if you're a fan of Ethereum, you're also a fan of surveillance technology, which to me, again, it doesn't feel like you'll be on the right side of history in terms of the way that the tide is moving. I mean, you were mentioning earlier, you sensed there was some sort of shift, and I'm also sensing that shift, a cultural shift, a push back against woke ideology, against some of the extreme politics that have been shoved down our throats, some of the tyranny. We've seen like all sorts of what they've described as, I'm putting in inverted commas here, your old far right parties that are increasingly gaining momentum around the world. And it also just strikes me as like, if you care about freedom and fairness, I don't know how you can support those type of organizations, which to me are pretty much companies.
And touching on the Ethereum and CBDC thing as well, I've spent 25, 30 years of my career in and around software engineering and implementing systems and services and everything else. And I look at something like Ethereum, and there's that famous flow diagram of the different stages of Ethereum as they roll out since they moved to proof of stake. I look at that and it's just horrendously complicated. And you can do all your own research on Ethereum and see how complicated it is and how many times they've refactored this and changed the rules for that and changed the issuance for this and changed the way this thing works and that thing works and staking works and doesn't work. And they didn't even implement the ability to unstake your Ethereum until after they'd moved to proof of stake. Like, there's all sorts of craziness there. Now, a golden rule throughout my entire career with everything software related and implementation is keep it as simple as possible and no more than that.
Yes.
The simpler something is, the more elegant it is, and the more reliable it is, the easier it is to maintain, the more robust it is as a solution, the easier it is to test, and the easier it is to enhance, and the more stable it acts as a system. So I look at something like Ethereum, and I wouldn't trust my money with it under any circumstances. I don't trust that it's a stable thing. And you've seen it fall over time and again. It wasn't all that long ago there was instability in Ethereum. Now, couple that to a government's general inability to deliver any kind of system or solution with any kind of sensible time frame or on budget or to spec in any way, shape or form, you're building a very shaky system on top of a very shaky system that is doomed to being like an absolute disaster. So almost counterintuitively, I'm glad they're building CBDCs on Ethereum, because it's all going to end up in a pile of mess. Like, it's not going to work because Ethereum doesn't work and governments certainly aren't very good at doing IT. So the sum of those two things together hopefully dooms CBDCs to pretty catastrophic failure.
Wow. Yeah, that is great. I mean, there's a quote that maybe you know it, but because I worked in software for a couple of years myself, and there's a quote along the lines of, isn't it like something, the more complex a system, the more prone it is to breaking, but complexity is like the enemy of, was it execution, or you've got something maybe. I don't know what I think there's a industry quote along those lines, and everything was around building the most, as you say, simple, reliable systems and not trying to sort of overcomplicate and over-engineer things. And even in the context of building websites, you really want to build them in a way with a code that's really clean so that anybody can come in later and understand what's potting. But if you've got some guy who thinks he's a genius and does all these little tricks and everything from day dot, somebody who comes in and looks at it later and goes, my God, what a mess you've created. So that's kind of my sense too, just from a technological perspective. And Ethereum is whatever Vitalik and the boys decide, because they are the ones who run the rules. And the sort of most egregious claim they make is that they're decentralized, because as I've had a conversation with Jeff Yu recently from Monochrome, and he was just saying, like, when people talk about decentralization on a spectrum, it's a bit silly, because the idea is like you're either decentralized or you're not. You can't say,
binary.
well, yeah, I mean, and so, from my perspective, like if you need to have 32 ETH to run a node, I mean, that's hardly empowering to the average person. So it means that everyone's going to be relying on these big servers or big users. And a lot of people know that I get particularly pissed off about crypto, because I worked in and I saw all the incentives and I thought, oh my God, it's everything I thought, but even worse. So yeah, because I had a layer of work in. So that's another story. But let's shift away from crypto. This is a Bitcoin show, and I'm fed up from crypto. I'm even getting hotter on the collar thinking about it. So, okay, Bitcoin Advisor. You sort of touched on earlier about like how you first got in touch with Pete Dunworth and sort of how that worked from, you did you had a Bitcoin super.io, just sort of outlining your journey and saying, this is how I did it. It's not financial advice, but it's pretty simple. These are the options. And yeah, talk to us a little bit about Bitcoin Advisor as a business and what are your different offerings? And then we can unpack those and go a little bit in greater detail.
So the reason we kind of met was I've been talking about Bitcoin Super and the custody model that I arrived at for making sure that those funds were safe and secure, because it's a not insubstantial amount of money, your superannuation. I mean, I think the median amount that a male in Australia has is something like $164,000. So it's not an insubstantial amount, and there's quite a broad range in that as well. So
sorry, can I interrupt you there? What age is that male? Just out of interest.
That's across the male working age population. So clearly there's a broad range between 18 years old and 67 years old, the retirement age. But the median amount across that cohort is about 164 grand.
Okay,
so
cool.
You can expect a broad range in that. But as with the sixth wonder of the world being compound interest, clearly the older you are, likely the higher your super balance is. Anyway, long story short, I had to work out for myself the best way of custodying that Bitcoin securely, and ended up catching up with Peter just before the Bush Bash in November last year. And we got to talking about custody and the model, and it was a nice validation that what I'd come up with was the same custody model that Peter was deploying for his multifamily offices and for all of those families. And so we have a very similar model that we'd considered and had executed. And that kind of got us to talking. And one thing and another, a few months ago, we decided to expand on what Peter does with net worth advisors and create the Bitcoin Advisor, which really does primarily three things. The first is collaborative custody, and we can delve into that model in a minute to help ensure that clients' funds are secured safely and securely, and there's significant redundancy in that model for their peace of mind. We then layer in estate planning, which again is quite an expansive topic we can talk about, which really, a lot of Bitcoiners work very hard to accumulate their stack. But a lot of Bitcoiners also haven't considered what happens if I get hit by a bus tomorrow. And if you get hit by a bus tomorrow, what happens to your Bitcoin? Does your spouse understand how to access it? Do your beneficiaries understand how to get to it? Do they know where your key is? Do they know where your seed phrases are? Do they know how the custody works? Will that Bitcoin end up as a donation to the network, or do you actually want your Bitcoin to pass down to your beneficiaries? And my inclination and all the conversations I have, everybody wants their Bitcoin to be generational wealth and an inheritance for their heirs. I've only really heard Michael Saylor say that he's going to donate his personal Bitcoin to the network, but Pete and my favorite phrase is you do you, and Michael can do Michael. So if that's what he wants to do, then great. And then really the third part is beneficiary education, or Bitcoin education in general. We find it's really important that your beneficiaries, whether it's your spouse or your children, at least understand the nature of Bitcoin, what it is, why the primary purchaser of Bitcoin is doing what they're doing. It acts as a validation for their extended family as well to understand why they're saving in Bitcoin and what they're doing with it. And then to a degree, understanding the custody model and what to do in the event that something unfortunate happens. Either they lose their key or their seed phrase, or something more tragic happens. We then put all of the framework in place to make sure that not only legally does everything pass effectively, but also physically, particularly with Bitcoin being a bearer asset, you obviously don't want to lose the Bitcoin. So we have protocols in place that help families do that. And over the number of years since 2016 that Peter's been doing this, he's taken a number of families through that process. So one of the things we're perhaps most proud of is we've never lost a sat, and we think that is the lowest bar you can have. We have to be perfect, and any less than that is unsatisfactory. So we're very proud we've never lost a sat, and that the model supports ensuring that will continue.
Okay, great. Okay, so there's a lot there. So let's start off with custody, because custody is, as far as I can tell, it's there are no solutions, the only trade-offs here. Yeah, that's quite a common phrase we hear in Bitcoin very often.
Yeah.
The sell, and I guess you could say the puritanical Bitcoiner would always say, look, I don't trust anybody else outside of me and my direct family, and I'm not inclined to give it to the likes of Casa or Unchained, or even the Bitcoin Advisor, however trustworthy you folks might be. Then there probably are people who don't necessarily trust themselves, or don't necessarily trust their family that they could do the right thing, and or also perhaps not as adversarial minded, if you like, and are more trusting by nature, and also want that additional security. What has been your experience when you're engaging with different Bitcoiners on that particular issue? I mean, how have you addressed that, the various trade-offs, and are you getting any pushback from like Bitcoiners, proper Bitcoiners, and saying like, hey, I don't want to give anyone my keys?
Absolutely. And everyone is on that broad spectrum of level of understanding of how custody works and the importance of self-custody and the trade-offs. So like you say, there's no perfect solution for custody and Bitcoin. There are only trade-offs. So with collaborative custody, it's kind of a journey of understanding from the worst possible scenario is leaving your coins on an exchange. It's lazy and it's risky, and you're exposed to all sorts of counterparty risk that is well documented on lots of podcasts and discussions. So whatever you do, our primary concern is get your coins off the exchange. So then usually the next step for an individual is single sig and moving it to a hardware wallet. Now, I find one of the epiphanies I've had along the way, and the thing that was never explained to me that I had to work out for myself but have found immensely valuable, is to understand that your coins never leave the blockchain when you have a single sig setup. The coins are still on the blockchain, in the internet, on the Bitcoin blockchain, so they're everywhere and nowhere all at the same time. They are not on the physical hardware wallet. So when you create a Ledger account or a Trezor account or a Cold Card account and set up the wallet with that device, you're creating a new wallet on the blockchain, and you can move your coins into that wallet, but you are not moving the coins from the exchange onto that device. That device is just a key, and that key signs a sending transaction. And once I understood that for myself, I felt an awful lot more comfortable moving my coins off an exchange into a hardware wallet, because it's not on that device. So a lot of people carry a lot of paranoia of losing that device or the seed phrase. So they don't sleep at night. They get really concerned about it because they don't necessarily understand that that device is replaceable if you have your seed phrases, and if it breaks, you can recreate it using your seed phrase. And if you put your seed phrase in a few different places or keep it safe and understand the importance of that seed phrase, then you're a lot better off than leaving your coins exposed to counterparty risk on an exchange. So then the next generation on from there for me was to understand multi-sig, and that reduces your dependence on any one key particularly. So I use Unchained myself when I was learning this, and Unchained holds a key and I hold two keys. And it takes two of those three keys to sign a sending transaction. So I've got redundancy in the two keys. So if one of my keys breaks and I lose a seed phrase, it doesn't matter, because I can work with Unchained to move my funds if I need to, and I can swap out that dead key, for example. The next generation on from that, or the next iteration on from that, is what we do with collaborative custody. So in the scenario, you become a client of the Bitcoin Advisor. Dale holds a key, Bitcoin Advisor holds a key, and Unchained Capital holds a key. And in that scenario, you have two-factor authentication on the Unchained account. So you have self-custody and security on that wallet. So only you can log in to create a sending transaction because it's under two-factor authentication. They also have video security on there, where when you set your account up, you can have a minimum tolerance for sending transactions that if it's over, say, 5%, it asks you to record a video from a prompt that they then compare to the video that you recorded when you set it up to make sure that it's you requesting the send transfer. So that's another level of security. So in the beauty of this setup, if you lose your key or seed phrase or both, maybe you have a house fire or a flood or something physically happens to you, we can work with Unchained, and either you or your executor in the event that you've passed in order to swap your key out or move the funds to another vault. In the event that something happens to the Bitcoin advisor, you can work with Unchained to swap our key out.
Mm-hmm.
And in the event that something happens to Unchained, we can work with you to swap their key out. So you have three-way redundancy in that. So what's the trade-off? The trade-off that you're making is that in order for you to send funds out of your vault, you either require Unchained or the Bitcoin advisor to sign that transaction with you.
Yes.
So you can't just do it by yourself whenever you like. Now, that trade-off, we think, and our clients agree with us, is worthwhile because it's cold storage Bitcoin for the long term. So you are not likely to need to send Bitcoin urgently or regularly. So you don't necessarily need to contact us that often or Unchained that often. But Unchained will help you send. If you can't get hold of the Bitcoin advisor for whatever reason, you can work with Unchained and do your send transaction. So it's really straightforward. But we think that redundancy offers a significant advantage over the inconvenience of having to ask a third party to sign your sending transaction. Now, in the event that something happens to you, you get knocked over by a bus, we can work with your spouse, and we go into a probate process. So this is something that we've taken a number of families through over the years. That probate process, we work with the executor of your will. We get a notarized death certificate, identification, and other things. We can then work with you or your executor and Unchained to release those funds to your beneficiaries.
Okay, that's great. So when it comes to the fact that, let's say you've got a key, Bitcoin advisor key, Unchained has a key, and what prevents you from engaging with each other and conspiring against Dale to take
colluding against you?
Colluding against me is the fact that I've got 2FA. So I would get a notification that said, hey, this transaction is going to happen. Do you approve it? And you'd be like, no. Okay, so that's clear.
Yeah.
You're storing these keys. Now, how does one actually physically store these keys in a manner, whether it's you and Unchained? I'd be interested to hear, because I suppose, the lowest form of security would be if you got a Excel spreadsheet with Dale's, private key, or what do you guys do from a security perspective?
We don't know anything about your key. You just treat that as any other, like you would any other single sig or key. It's just your ledger or your Trezor or your cold card. You keep that to yourself. We have no idea about your private keys whatsoever, and shouldn't, because it's your key and your custody. Our key is a master key that we deploy across all of the vaults, across all the clients that we have. And we have very robust protocols around that key. So there are multiple copies of that key in secure locations. There are stamped seed phrases on 3 continents. So that key is super secure and resilient. And we can use that key whenever we need to help each client do whatever they need to do. So we do regular key checks with them. We sign regular transactions with them as payment for our services. So that's a secure key. And then Unchained have their own key management methods for their platform. So they can sign when they need to sign, should they be requested to. Okay.
And in terms of your revenue model, I'm assuming it's a management fee. Talk to us a little bit about how that is structured, if you're okay to chat about that. And
yeah, of course.
What the sort of feedback has been like.
Yeah, look, so investors generally who invest in all sorts of different products are used to management fees for those products. We work with a lot of clients with a very broad range of Bitcoin holdings, and we keep it really simple. All of our services, all wrapped together, we charge as 1% per annum, and we bill that in monthly increments in Satoshis. So it's a very, very simple model. Whatever funds are under structure within the custody model, we charge 1% of those funds in Satoshis on a monthly basis. So 1/12 of 1% per month.
Okay, so in that instance, just because that's actually was going to be one of my questions, that how does actually one do this? So let's just, for the sake of, and I'm going to say, you're going to invoice me now 100,000 Satoshis. I mean, that would be quite a low invoice. But let's say we go ahead and do that. So then I would then have X number of days to go and actually pay that. So I'd have to go and buy Bitcoin. So you guys aren't taking fiat. You're not saying I need to slice off a piece of your Bitcoin each year. You're just saying, okay, we're going to issue an invoice in Bitcoin as at, I guess, the date of invoicing, and this is the Satoshi amount, and send it to this wallet address.
So there's great reporting within Unchained as an example, and whatever your balance is at the end of that month, 1/12 of 1% in sats is the fee payable.
Easy. Pretty transparent. And how have Bitcoiners looked at that? Because obviously with Bitcoin, we've got ourselves an asset that there's no real storage cost. Like if I had $10 million worth of gold, I would probably be on the hook for some significant fees. We also
2%,
know,
right?
yeah. I mean, I've never sort of held any gold, but yeah, I mean, I know that it is quite significant. So if it's 2%, I mean, that's quite sizable. So how have you found Bitcoiners and their attitude or / appetite for the 1% fee? And perhaps you've seen a pattern amongst Bitcoiners in terms of certain demographics or something like that?
Yeah, it's a great question. And really it comes down to the level of sophistication of an investor. So young and early Bitcoiners go, what, you want how much? And what if the price goes up? That means I'm paying more. And it's like, well, you still pay the same percentage in Satoshis. So if you're winning, we're winning. And if the price is dumping, well, our fees are dumping if you measure it in fiat. So that's why we do it in Satoshis, because we think it's a fair representation of the value of the investment. Now, established investors or older investors typically are used to paying management fees for investments, like 2% for storing gold in a vault, or 2.5% on a closed-end fund, or whatever it may be. So generally, their perception of 1% is acceptable. Like it's not a large amount. Now, the important part comes in. What am I paying for? Well, you're paying for the reassurance that there's redundancy in your security and setup, but also then the advice that we can bring to bear and the guidance that we provide around estate planning and the beneficiary education, which adds a lot of value and peace of mind. Now, there's a couple of kind of unintended consequences when you get these things right. So if you get the security right, people sleep better at night. So the custody model, once understood, is generally well received, and they understand the benefits and the trade-offs. When you come to estate planning, there's some really interesting things that you can do, particularly, if in your last will and testament, you can trigger a testamentary trust, which is an activity that happens on your passing, where a testamentary trust gets created and your assets move into that trust. You can then, as part of the setup for that trust, you can specify how you want disbursements to occur. You can use it as a framework, a particularly clever legal framework for protecting assets to ensure that, in certain circumstances, and I'll give you a very personal example. One of my best friends, his dad died when he was quite young, and they were quite wealthy, and his mum obviously inherited the wealth. She never changed her will. She got remarried, and then unfortunately she got cancer and passed away, and all of the family wealth went to her new husband, and none of that wealth went to Charlie and his brother. That was a really quite catastrophic situation for Charlie, and certainly you could imagine something that his father would have never wanted. So that scenario is completely avoidable by setting up the right kind of trust structures and will structures. Now, that's not something that most Bitcoiners or plebs tend to think about, because most Bitcoiners and plebs don't come from a background of wealth, and therefore don't necessarily understand those legal frameworks that are available to them to protect their wealth through generations and to set those things up. And Pete and I often talk about this, and Jake as well. We're targeting high net worth investors, but we're working with all Bitcoiners. So starting from people who are just beginning to DCA all the way through to substantial Bitcoin holdings. And my view is that anyone who owns a Bitcoin at some point is going to be a high net worth individual. So you ought to have at least the education and understanding of what these frameworks are to ensure that all the hard work you put into stacking sats puts it in a framework and a situation where it's going to pass to your kids. So you can do things like, for example, I'm a single dad with 2 young kids with me full time. If something were to happen to me, I don't necessarily want to dump a huge amount of Bitcoin wealth in future on their shoulders for them to deal with. So you can set disbursement rules up that, for example, when they're 25 or 35 or 45, they receive a percentage of the Bitcoin at that point in time. And I've specified that to only do that release at 75,000 blocks after that prior halving, because I know that will be, give or take, the peak of the bull run in that epoch. So that if they do get it and sell it, they're at least selling at the top and not at the bottom of the bear. Now, that's cool shit, right? Like, that's a really interesting way of making sure that, you know, if you're not around, all your hard work isn't for nothing, and you haven't just ended up donating your coins to the network.
Nothing could be worse.
Sorry, that was a long way of answering about fees, but I think the experience and insight and the ability to help clients set those frameworks and structures up justifies the fee. And if it doesn't, we give all of this information out anyway, and everyone can do it themselves. And, you know, that's our gift to the universe. But often a lot of people don't have the time, inclination, or understanding to do it. And it's a better investment from them to, you know, pay a fee for that service. And we hope that, you know, that adds value. And if people don't feel that it does, we're still happy to help them. We still don't want them to have their coins on the exchange, and we're still happy to point them in the right direction of a good lawyer who can help them get their affairs in order before they need them to be.
Totally. Yeah, I think, you know, coming from a legal background, I absolutely can resonate with the importance of proper estate planning, because there could be nothing worse than having a situation where the state is administering your estate. I mean, that for me is the nightmare, because and so I've got a will that I've updated like 4 times, and now I think I need to update it again now that we're talking about it, because it's something that's always been on my mind. And I said, I want to make sure that when I die, this is like absolutely laser clear. And when it comes to Bitcoin, given the fact that we don't actually know in the future how sophisticated people are going to be, are they going to be able to access this properly? You know, I've explained to my wife like probably like 10 times, and I get this kind of glazed over look. You know, I've kind of said, here's the key. This is what you need to do. This is where you go. And it's just like, too hard in many instances. So I think a lot of people feel that way, and it does make sense. So I think there's certainly, I see a very strong value proposition. And also like the fact that you guys are actually, you're sort of promoting, you know, Bitcoin's core ethos, you know, self-custody. And at the end of the day, you are dispensing this information for free. And I think that is also part of the Bitcoin ethos. I mean, you know, like I give my time, and I really love what I'm doing, by the way, so I don't feel like it's a job or anything, but I hope that people find value in this podcast. And, you know, I think you guys, you do talks, and I know you you go to the Bush Bash, and you're at the Sydney meetup and those kind of things. So yeah, I suppose from my perspective, you know, without somebody, I'm like, and I suppose you guys are perhaps biased in the sense that you're selling something, in the sense that you're selling your services. I will say, like, as a kind of observer, there's nothing more important than getting your shit together when it comes to your estate. Do it. Don't delay. Stop mucking around, because honestly, I've actually I've got this weird sense that like, I've seen this over and over and over again of late, where you see like, oh, life's so short. This incident happened, or this, you know, this person didn't know they had cancer, and then 6 months later they're dead. And yes, strange things happen in life. And, you know, for me, it's always a signal like, okay, make sure you're enjoying your life, enjoying what you're doing. But also, when it comes to money, like, what are we doing all this for? Like, we're working our asses off for money that's, you know, draining in value. Yeah. We're storing our energy in Bitcoin. The last thing you could ever do is almost like just screw that part of it all up. I mean, it's like saying, oh yeah, I bought a piece of the internet in 1995, and then in 2050, oops, I fucked it up. I lost it. And you're like, are you joking?
And also you spend all that time in between worrying about it. Like, what's the point in stacking a ton of Bitcoin for your future benefit and your children's future benefit, but spending the whole time worrying about it? So really, like I said, you know, our key kind of goal is get everyone's coins off exchange and peace of mind. We just want people to be able to sleep at night and know it's all sorted and everything's okay, and you don't have to worry about it. And then one of those unintended consequences I alluded to, interestingly, that we see with a lot of customers, once this is sorted out, and, you know, your estate plan protocol is sorted out, and your custody is sorted out, and your beneficiaries, be it your spouse or your children, are somewhat educated and are much more at ease with it, it's considered tacit approval to buy more. We see so many customers go from a 5% to a 10% to a 20% allocation or more, because all of a sudden everybody in their surround is happier that it's done properly, that it works, they understand the model. You know, I had a call with a customer earlier today, and I'd onboarded him over the course of the last few days, and he finally managed to get some funds into an exchange and turn it into Bitcoin and move it into his vault. And he said, me and the wife were high-fiving, and we're trying to, we're trying to work out how much more to buy. And he said, I think we should do X. And his wife's saying, well, no, we can do 2X now, because it's all okay. It's just an astonishing sense of relief for everybody when they get this stuff nailed down. It's just, it was hilarious to me to hear, you could hear it in his voice. He was absolutely ecstatic.
That's brilliant. Absolutely loved it. Eh? No, because we had a chat, you, me, Pete, and my wife a little while ago. And I've been going on about the super side of things, and I'm keen to unpack that one. But we similarly did a similar high five shortly after the conversation. We're like, whew, let's do this, boy. So let's talk about super now, because I've got a little bit of a rant on a complaint about them, because during 2020, much like you, I was looking at my finances, and that's how I came across Bitcoin, incidentally. And I thought, okay, I've got some capital, discretionary capital that we can put to work somewhere. Where we're going to stick it? It turns out, to be Bitcoin in the end. And then I looked at my super, and, admittedly, it was pretty pitiful given the fact I've only been here a few years. But I thought, is there a way I can actually buy Bitcoin? And I looked into it, and there was just no way. And I was like, all right. And there was no ETF or anything, even that was like a proxy for it. And the only way I could actually buy it was if I had bought something like MicroStrategy shares in a self-managed super. And then there was all this information about, well, actually, you need about 100K or 200K to be able to even make it worth it, because the fees are going to eat all your returns. And then I thought, okay, maybe I shouldn't do that. My super's too small. It's a bit pitiful. So I then decided, okay, I want to find out what you guys are investing in. Tell me. Well, and I know you guys spoke about Host Plus recently, my super company, and oh yeah, no, you have no clue what they're investing in. International shares.
And their reason is because it's proprietary information, and it's their business model, and they don't want to share that. So it's not, you're not allowed to know. It's, I'm sorry, that's our proprietary investment strategy and advice and everything else. But then you look at the performance of all of them over the last X number of years. There's not much variance between a Host Plus or an Australian super or anything else. Now, the variance might look quite big when you zoom into the comparison between the supers, but when you put it against the chart of Bitcoin over the same period of time, it's much of a muchness. Like, it's about 8.8% per year for the last 10 years. So it's not dramatic outperformance. Now, for most investors, that probably sounds okay. Probably doesn't when you layer in inflation over the last few years. It's actually pretty awful. But then, those kind of industries are not interested in Bitcoin because it's volatile, and terrorism and Ponzi and all the other nonsense FUD that they normally spout. But when you layer the chart one against the other, Bitcoin in that same 10-year period is over 80% per year. Now, the compounding amount there is just such a dramatic difference, even with the volatility. So tell me that's risky or not. It's volatile, it's not risky.
Yeah. And I know that's something that Pete Dunn has talked a lot about, how risk and volatility are not necessarily the same thing. A lot of people, I guess, TradFi people would say that risk is almost or volatility is a proxy for risk. But yeah, if you actually understand Bitcoin, Bitcoin's actually the risk-off asset, but the rest of the market doesn't know it yet. It really blew my mind when I got to see sort of a little bit into how the super funds actually work, because as I was saying earlier, like literally it's like we invest in international shares, like where? Emerging markets, where you're investing, and what are you investing in? Property, what kind of property? Which markets? How geared are they? And I'll include this a little bit because I know you spoke recently about it, particularly with Host Plus and a lot of their exposure to the illiquid property on their books, which I'm assuming is commercial property. The bigger commercial property is actually quite a scam, and I don't think people actually quite realize it in terms of the valuations, right? So when properties are valued, they only have to be valued at the face rentals. They do not have to be valued at the net effective rentals after the incentives that are offered, whether it's the rent-free periods or whether it's the literal incentive. So the incentives in commercial property are like, you'll say, okay, there's a 20% incentive to sign a new lease here in Brisbane, let's say, for a new 3-year lease. that just effectively means you get to slice off 20% of the cost over the 3-year lease period, and you get a rent abatement. So that's your actual effective rent. That's what the landlord's getting in their bank account. But the valuation is 20% higher. So in this sense, and I'm in this game. And so, for example, when I'm negotiating deals, don't touch the face rent, boys, but you can play with the incentive. That's how the game works. And I'm just like, this is just such a scam. It's sort of like the accounting of Bitcoin. We will only count it if it goes down, not if it goes up. And so, yeah, talk to us a little bit about now the super side of things, and I guess the self-managed super, and how Bitcoin fits within that and your suite of services.
Yeah, sure. So I'd say probably a good quarter to half of all of the customers we're talking to and clients we're working with are in the process of setting up a self-managed super fund, or already have, and are wanting to get their Bitcoin into the set of services that we have. Now, for those setting it up, the process I went through, and there are a number of options, but the process I went through was using a company called eSuperFund. They're a no advice model. They usually have a perpetual first year free offer, so there's no fees to pay. You basically go to esuperfund.com.au and set up an account with them. They step you through the process of setting up a self-managed super fund. You have to make a decision around whether you want a corporate trustee or a personal trustee, and there's lots of information on the site as to why we recommend a corporate trustee. From there, it's a follow the bouncing ball process. It's relatively straightforward, just a little bit laborious, but ultimately you end up with a self-managed super fund bank account. You end up with a self-managed super trading account or exchange account, because the golden rule is separation of funds. You can't commingle your personal Bitcoin and your superannuation Bitcoin. And ultimately, once it's all set up, you can do a rollover out of funds from your traditional fund. That money then lands in your super fund bank account. You can then obviously transfer that to your Bitcoin exchange. You can buy Bitcoin and then move it into your custody solution, whether it's single sig, multi-sig, or collaborative custody. So it's a relatively straightforward process. It's just a little bit laborious. Then with your compulsory contributions, you obviously inform your employer that you're no longer in the managed fund, that you're in your self-managed fund. So you give them the details of that. And every month you get or every payday, you get your self-managed super, or rather your compulsory contributions from your employer. You can then deploy that into Bitcoin. So I'm DCAing 12 times a year with Bitcoin. One difference, in a managed fund, you pay 15% tax as soon as you get paid your super. In a self-managed fund, you have to accrue that 15% and you pay it once a year when you do your tax return. So that's a slight difference. Another thing that we often do, particularly for older customers, it's not a bad idea if they've held insurances in a managed fund for a long period of time, is to leave a relatively negligible balance in their traditional fund and move the rest out to a self-managed super, just to maintain those insurances. But again, anytime anyone does any of this sort of thing, everyone's circumstances are different. They really ought to consult with an expert or an accountant and understand, do I have the right levels of insurance? Because obviously people go through different stages of life. They downsize houses, they do all sorts of things, and don't need varying amounts of insurance to cover them for things to keep them comfortable. My personal scenario, I don't have any insurances because I consider Bitcoin my insurance. So I'd rather buy more Bitcoin than pay insurance premiums, and that's the risk I'm willing to take. So call me crazy.
All right. A couple of questions. Something that I thought about was just in terms of keeping your Bitcoin separate. Would it, like a fair analogy be in terms of like if you had gold in your self-managed super, you couldn't go and store it in your own personal vault and mix it with or do it at home with all your jewelry where you keep all your stuff. It literally, you'd have to go to some sort of private vault, open up an account for the super, and then go ahead with that. Is that, I mean, that's kind of a good sort of analog version, right?
But maybe an even clearer analog version. With a self-managed super, you can buy anything. So you could buy fine wines, you could buy art, you can buy property, you can buy all sorts of things. You just can't use it for your personal benefit whilst it's in your self-managed super. So if you buy a nice painting, you can't then go and hang it on the wall in your house. It has to be in storage as an asset to accrue in value or perform as a store of value for you. If you buy a property, it's in the name of your super. You can't live in the property. Now, the only exclusion to that is if it's a farm and it's a working farm, and that works that way. So, but same for fine wines. You can't invest in a fine wine collection as an investment and then start drinking the wine. It's an investment for your self-managed super. It would need to be in storage somewhere else, and everything else. So it's just a separation, so that the basic rule is you can't benefit personally from anything that's in your self-managed super. It is there for an investment and that purpose only.
Yes. Okay. Yeah, that makes sense. And I don't know if you've had this thought at all, but again, I'm a bit of a Bitcoin psychopath, so the adversarial thinking is off the charts. And I've thought about this as a potential. All these Bitcoiners are essentially dumping their existing supers because they realize it's just absolute BS and the returns are shit and there's no transparency, and just there's like a million reasons, and why not just do it yourself? And then the government's going to go like, well, actually, we don't have access to those monies. Yes, we can ask them each year, do you still have them? They can go, yeah, no, or not. They'll be penalized.
Voting accident.
You can say, oh, I lost some or whatever. But I can just imagine a huge amount of scrutiny. You can say, oh, chain analysis, we tracked you. I can imagine the governments, because they can just print more money, and they've got probably they'll never shrink. So they'll get more and more bureaucrats on the payroll just to kind of, okay, now that's my job. I've got to go and look for naughty Bitcoiners who might be spending their self-managed super. So then there's going to be a rule. They'll say, hey, you know what? You guys all need to sell it. And then you can buy this ETF. It's liquid. And then effectively you can't go with your wealth. If you wanted to pack up, like I can't take my super with me if I've invested in, MicroStrategy shares, for example. Can't just sell, take it in the bank account and bugger off. Whereas with Bitcoin, you could just sort of quietly disappear, and the chances of actually, being found for a while would probably be quite low. So I've thought about that as an option. I don't know if that's something you guys have thought about as being like a possibility.
Yeah, it's a very regular thread of thinking, and we kind of discuss it a lot and kind of game out what could and couldn't happen. And take a step back for a second. The pool of superannuation funds in Australia currently is worth about $3.5 trillion. That represents about 140% of GDP. So it is not insignificant. And that's in 2023. They predict or extrapolate that by 2040, the pool of funds will be around $10.5 trillion, or knocking on for about 190% of GDP. It is my assumption that the government looks at that and goes, we're having some, and we want as much of it as we can get, because we're bankrupt now. We're going to be more bankrupt later for all the reasons you just mentioned. And no government anywhere could resist staring at a $10.5 trillion or even $3.5 trillion pool of money and go, well, we need some of that to help run the constant expansion of our existence. Well, that is likely. Now, for me as a Bitcoiner, am I more comfortable if my small slice of that $3.5 trillion, am I more comfortable if it's sitting with a financial services institution where those funds are co-optable in short order? Or am I more comfortable if my slice of that $3.5 trillion is sitting in self-custody Bitcoin under my control? The one guarantee in life is they are going to move the goalposts. They are constantly moving the goalposts. So like you said at the start, the retirement age is now 67. Well, what's to stop them in a few years moving it to 70 and then 72 and then 75? And then before we know it, the retirement age will be 1 year before the average life expectancy of an Australian male. So you'll be lucky if you get a year to spend your pension. None of that is certain.
You've been forced to contribute to. You didn't even have a choice.
Exactly. And so, it's very hard to understand what's going on. Like earlier on in the year, there's obviously lots of talk around tax incentives being removed on any income on superannuation above a balance of $3 million as one thing. They also, at the same time, talked about taxing unrealized gains, which is frankly bananas. It's very hard to plan for stuff that isn't current legislation. It's all speculative. So, for example, the tax, losing tax incentives on any earnings on anything over $3 million in balance, well, Bitcoin's not yield generating. So they really haven't thought that through very well. It's all about capital appreciation. So there are all sorts of implications to that when you retire, and the transfer balance cap of whatever it is when we retire. It might be 2.5, 3 million, 5 million, whatever it might be. So they really haven't thought that part through. And the taxing unrealized gains is crazy because Bitcoin's highly volatile. So maybe they tax you on unrealized gains in a bull market where the price jumps, a factor of 2 or 3. But at the same time, if the next year it drops back 60, 70, 80%, Are they going to do refunds on unrealized losses? Like this could
It's
work out really beneficially for Bitcoiners because you could play that market and pay very little tax and accrue huge gains if you time it all correctly. So it's really hard to predict what's going to happen. I think everybody is right to game out as many attack vectors as they possibly can. But the one kind of final thought I have on that is I would much rather have self-custody Bitcoin in my go bag and a me-shaped hole in the door if they really screw with the regulations, and see you later. Like I'm moving to El Salvador or buying a yacht or doing whatever with the huge amount of Bitcoin I've hopefully got by that point in time.
Yes, exactly. I think the unrealized gains thing is the most hilarious, and it's only a sort of a notion that is discussed in socialist countries typically because it just is so unworkable and stupid. I mean, so many people who are wealthy will have far more. They don't necessarily have enough liquid capital to be able to even pay that. So it's like, how do you imagine I'm all in on Bitcoin and I'm sort of taking off little slices to pay my bills. And you go, oh yeah, your balance is 10 more, you got to pay whatever percent. You go like, well, you say now I have to sell the asset itself to pay for the gains that I wouldn't have enjoyed but for now your rule. It's just, yeah. But
it makes no sense.
But I think you're right. Like you can go down this whole path of you gaming all the different situations, but ultimately you say, how can I have the most possible control over my future? And I think a self-managed super fund is the first step. And then what is the ultimate way of securing your future? I think it's Bitcoin. Everything else will still be subject to the same rules and regulations that apply today to existing supers, albeit you'll be able to at least pick what you want to invest in, which I think is still good. I mean, if you wanted to go and drink your fucking wine, go and drink your wine, whatever it is. Do you know what I mean? So that's fine.
There was a great Twitter comment the other day. I think Farmer Jen made it, and she was talking about the banking system and how it's a 3 of 3 multi-sig between you, the government, and the bank. And I went, actually, no, it's a 2 of 2 because the bank decides whether you get your money out or not, which is well documented recently. Yeah. You don't have any say in this whatsoever. You can make a request, but they can deny it and not give you the money that's sitting in your bank account. So to the point, I think the ultimate freedom and the whole reason we're into Bitcoin is because it's my money under my control in a self-custody situation. If I need to go, I can go and I can take my money with me because it's everywhere and nowhere all at the same time.
Yeah. And even if in the worst case scenario, you had a situation where you had somebody who had a super and the Bitcoin advisor had a key, Unchained Capital had a key, and they had a key. And the government goes to you guys and says, oi, give us all your clients' details and do all the stuff. And you'll be like, okay, you have to do what you got to do, right? But you can't do anything about it. It's still in our control. And so I think that's the beauty of kind of the setup that you've got going there is that even under compulsion, there's nothing you can actually do. Whereas if you had a bank or some other situation, I'm pretty sure they'd kind of just cough and give up every single thing about you.
They did in Canada, right? Like they turned people's accounts off.
It's very surprising. I mean, the nature of Bitcoin is such that every attempt at trying to squash it, control it, block it, undermine it, only makes it grow stronger. And it's an advertisement for it in the first place, particularly when governments are the ones screaming and shouting about how it's wrong, it's bad for the environment, it does this, it does that. It's just it's becoming so...
BlackRock tells them to change the narrative and all of a sudden it's a net positive for the environment and everything else. Like, BlackRock have determined that, everything's okay now, so we're all good to go.
Exactly. The current thing is Bitcoin is okay. And we'll just go with the current thing. And I'm actually happy with the current thing. If BlackRock's on board with it, obviously I don't think we're going to go down that rabbit hole in terms of what the potential implications are. I think the beauty is that us lowly plebs and serfs who are the last in the pecking order and the people who are least considered have been front running all of these rent seekers.
Love it.
Love it. It's breathtaking. And I think, there is potential for some explosive price action when that finally happens. BlackRock is not the kind of organization that's going to throw its hat in the ring and be embarrassed They might even have some sort of circus around, no, it doesn't quite tick the boxes yet, but come again, just to have the appearance of going through some sort of due process. But there's no ways Larry Fink can get on the blower to Gary Gensler and say, listen, boy, what do we need to do to get this thing through? You tell me.
Yeah. And we've seen that process in action, right? They said, well, you need to name your exchange or your custody of choice and everything else. So now Coinbase all of a sudden is the custodian of choice for all the ETF applications. But like you say, they don't roll out Larry Fink for him to be embarrassed. They roll him out to make it happen. But he made some interesting statements when he was on, I think it was CNBC, or having the initial interview a week or two ago, that this is going to democratize Bitcoin and make it available to everybody. Clearly still lacking in understanding that Bitcoin is already democratized and already available to everybody, and everybody can buy as little Bitcoin as they can afford wherever they are in the world. And what he's doing is not democratizing Bitcoin. What he's doing is opening the gates to institutional purchasing. That's the thing that they're doing, and that's why they're doing it, because they can see an upside to it. And particularly this year, when we're up over 80% year to date, no other asset's done that. My superannuation fund is up over 80%, remarkably. No other superannuation fund in the country is.
Just beat mine.
There's no way that the biggest asset managers in the world are looking at that going, well, we fucked that up.
Yeah. Exactly. And I think, it's all but inevitable that all the pension funds around the world, the sovereign wealth funds, they're all going to get a little piece of the action, and everyone gets the price they deserve. And it makes all the sense in the world to have even just a small allocation, 1%, 2%, whatever it is. You can look at it as Greg Foss would describe, some sort of credit default swap against fiat currency collapse. There's so many different ways you can look at it, but it's the asymmetric opportunity of a lifetime of our generation. And I can't see that institutions are going to let this one slip. I think they've been waiting for the right vehicle, and they want the go ahead. They want the green light, and the career risk of being the first mover is going to be removed. We saw with some Canadian pension
It's now replaced with a career risk of not being involved.
Yes, exactly. Because I don't know if you recall, there were some Canadian pension funds which had they had some sort of private equity investments in crypto stuff. I think and it went belly up. And I was like going, that's people's future. Like, you people were just a bunch of idiots. Like, you did no work. But now I think you'll find with BlackRock, I think you'll see it's going to be pretty obvious that there's no second best. It's Bitcoin.
Absolutely.
Andy, it's been a real pleasure talking to you. It's gone a little bit longer than I usually do, but there was a lot to unpack, and I really enjoyed chatting. I'd like to give you an opportunity now just to talk. Tell us where we can find you, your website, the Bitcoin Super, yourself, and the business, and then we can pack it up.
Sure. So I'm on Twitter, shit posting regularly, and that's Andy BTC Advisor. So pretty straightforward. And then the two websites, bitcoinsuper.io is the kind of free resource around self-managed super and Bitcoin. And then the bitcoinadvisor.com is primary site, and that's all linked from my Twitter as well. So
brilliant. Okay, awesome. Loving what you boys are doing. And I'm eagerly watching how things unfold in the next while.
Thanks. Really enjoyed this. It was great fun.
Awesome. All right. Take care. Cheers.
Thanks, Dave. Bye.
Thanks for listening to today's episode. I hope you enjoyed the conversation and that you got some value out of it. Either way, hit me up on Twitter and let me know what you think. My handle is Dale21M. If you've got any suggestions as to people you think I should be talking to or topics I should address too, I would love that sort of feedback. Otherwise, if you want to support the show, there's a couple different ways you can do that. The first is just to share it amongst your friends and family. The more that people hear the message that Bitcoin and crypto are not the same thing, the better. And I want to help people understand that. The second thing you can do is give me a 5-star review on whichever podcast app you're using. Of course, that's only if I deserve it. And last but not least, if you want to stream sats my way via the Fountain app, I'm not going to say no, but it's not expected. Thank you so much for your support thus far. It means the world to me. I appreciate the hell out of you, and the best is yet to come. Much love, friends. I'll see you on the other side.